Hi guys, how we doing? Welcome to my YouTube channel. My name is Audusd, and today we are just going to be looking at my trade recap. I took a trade on AUD USD yesterday, Tuesday, and I just want to do a brief recap on the trade for us. So thank you. If this is your first time, thank you for coming. If you've been before, thank you for staying through. Alright, so today we are going to be checking the trade I took yesterday on AUD USD. I took a short position on AUD USD, and I'm just going to be explaining why I took a short position. So yesterday's trade was kind of there was no news yesterday. It was a no news day. If you look at the calendar, it was a no news day yesterday. Right, so I just wanted to trade very lightly on there. So this is the daily time frame, and we can see a daily fair value gap here, a daily bearish fair value gap. I like to trade the candles, the daily candle specifically, right? I like to trade the daily candle specifically. If the daily and the weekly candle aligns, then very good for me. It gives me higher probability. But if it doesn't align, still I'm still going to trade the daily candle. I'm just going to trade it as relating to time. Alright, so this is the bearish candle that we see. Can I just indicate that very quickly? This bearish candle is the Friday candle, and right here we see the Monday candle. Monday traded into this bearish fair value gap. Monday traded into this bearish fair value gap on the daily time frame and closed outside the range of the fair value gap. Also, it took out the Friday's high. It took it out, right? It took it out, but it closed within the range. Let me increase it. Yes, it took out the high, but it closed within the range of Friday's high. So Monday's candle closed within the range. It traded into a fair value gap, bearish fair value gap, and also closed within the range, right? It closed outside the fair value gap. It closed within the range of Friday's high. So going into Tuesday, checking that on Monday, I already analyzed and prepared that on a daily basis, on a daily bias, it's most likely going to be a bearish day tomorrow. I know you're going to be saying, but see, this is a bullish candle. Well, just walk with me, right? It's mostly, I just had the bias, that the directional bias that's going to most likely be a bearish bias on the time I'm going to be trading the market. At the time I'm going to be trading the market. And so let's go to the 1 hour time frame, because I always kind of frame how I take my trade is it has to come from a whatever my setup needs to have responded and reacted from an higher time frame PDRA. You understand? It has to have reacted from an higher time frame PDRA, and this is a 1 hour time frame. We see a bearish fair value gap here, a bearish fair value gap here, and this is Monday. Yes, this is Tuesday right here. So let's just go to the 15 minutes. It's going to be a bit clear, but just this is the fair value gap on Monday. It's a bearish fair value gap. I indicate my bearish fair value gap with ash. So it's a bearish fair value gap. So, and we had this high, this short-term high. I already anticipated. Let's go to the 15 minutes right now for a more clearer bias. Okay, so we now know that this box right here, this orange box right here, is the higher time frame fair value gap, bearish fair value gap. And so I anticipated that there is most likely going to be trading, market is going to be trading into this space. I don't trade the London session for the AUD pair. I just trade only the London close or the New York open. That's what I trade. So this gray box right here is my Asian range from 8 o'clock, ICT Asian range. Let me put it that way. ICT's Asian range from 8 o'clock to 11 That's ICT's Asian range. He said most likely that's when market is very quiet and consolidates. You want to indicate that. So that's the Asian range, and basically how I do it is once I indicate my Asian range, I also indicate my midnight open candle. So this is the midnight open candle, 12 o'clock. If you can see it, this is the midnight open, 12 o'clock. All right. So I noticed there was a short-term high here and also a fair value gap. So I don't know which fair value gap it is going to react from, right? But I just wait, and there's something I look for in price, and when it shows up, I trade accordingly to what I see. And so we see during the London session, it traded all the way to the fair value gap, Nigerian time, London session, Nigerian time. It traded all the way to the bearish fair value gap. Now I take my trades from the 15 minutes. After I might have confirmed from, I take my trade from the 5 minutes, pardon me, after I must have confirmed higher time frame PD array on the 1 hour and 15 minutes, and sometimes 4 hours, right? But mostly 1 hour 15 minutes. Once I've seen my PD array at that point, I go to my 5 minutes and look for what price is most likely to do. So what I look for in price is I'm looking for a sweep. I'm looking for a sweep of liquidity. Let's say this is a high, so I'll be expecting something around a sweep here, then a change of market structure shift, and then an OTE creating then a downward. In the midst of the market structure shift, I'm expecting to see something like a fair value gap, right? A fair value gap. So I hope this is clear. Okay. A fair value gap. So really that's what I look to trade. If I don't see that, let me just make this very bold. Okay. So this is what I look to trade. This is how I look to trade it in the higher time frame PD array. And if I don't see that, I'm just going to look for what we have here. I'm going to look for a change in state of delivery, and inverted fair value gap. That's a sweep. First off, a sweep or an SMT, smart money reversal or divergence, and then a change in state of delivery, creating another block, and then an inverted fair value gap, which is an inverted fair value gap, and I'm going to trade that in line with the inverted fair value gap. I hope we get it. So that's what I look for, or when I trade on the 5 minutes. All right. So going into yesterday, I saw market traded into this 1 hour fair value gap, and then from here, I don't trade. I'm very time. I work with time and price. So I'm looking to see manipulation by 3 o'clock Nigerian time. By 3 o'clock Nigerian time, anything from 3:30, I'm expecting to see a manipulation. Then all this setup I just mentioned, I'm expecting to see it very quickly. So this is about the time when this was 7, this was 8. Now I'm using New York time, but I just translated it to Nigerian time, if you know what I mean. Okay, so we have an inverted fair value gap right here, and we see price reject from the higher time frame PD array, and then it took out this low. But I was kind of bothered about this low because this was around 2 o'clock Nigerian time, and if it closed with the body, if this place closed with the body, right, it just wicked it. It didn't close with the body, and I was very skeptical about it, because usually I expect that it closes with the body. If it closes with the body solidly, then I'm sure that it is going to continue downwards, right? If it just wicks it, then it might give me the impression that it is still likely going to reverse, of which it did in this place. Let me increase. Sorry, let me just increase this. Okay, very good.
You see there?
So I was expecting that if it wicks it, it's probably going to reverse, of which it did, right? But now that we have an inverted fair value gap, I'm expecting that price will trade back into this inverted fair value gap, right, to confirm change in state of delivery. You understand? To confirm change in state of delivery. First, we have the change in state of delivery, then we have an inverted fair value gap. It is first a fair value gap. Once price can trade through it, then it becomes an inverted fair value gap. And once it becomes an inverted fair value gap, I expect price to just come back to the inverted fair value gap before it continues lower. So, right, because of this week right here, I was skeptical about taking the trade first. So I wanted it to come to the inverted fair value gap. I expect that it will just tap the inverted fair value gap and not pass the middle of it. It doesn't need to pass the middle. Anything that makes it, it can trade through, but not close outside the middle of it. It must not close outside the middle of it. If it closes outside the middle of it, it's most likely a reversal. It's most likely not a valid inverted fair value gap, right? So I had to wait to see what it wanted to do, and let me delete this real quick. So I had to wait to see what it wanted to do, and it just tapped it. And when it just tapped it, it reversed. And I will look very closely at this place. This becomes the price, the candle that delivers price into the inverted fair value gap, and this candle traded below it and closed outside the range of it. So which means that this candle becomes another block. Amen. Are you following? All right, yeah. This candle becomes another block. I saw that and I just waited for the candle to close outside the range. That's why I took the entry here. I waited for the candle to close outside the range. It closing outside the range gives me a bias that that's a change in state of delivery. So we are continuing downwards. So once it closed, I just took the trade here. Instantly, I took the trade. I entered the trade about this place where you see price right now, and I put my stop above this fair value gap, this inverted fair value gap here. And so price began to trade downwards. Now if you see this spike happened at 9.25, which was 3.25. Now this entry happened at about 3.10. You see, I'm checking the time because I trade price in relation to time, right? Price in relation to time. So when I'm bearish, I'm looking for bearish signature move. When I'm bullish, I'm looking for bullish signatures. I don't expect bearish signatures to hold. If I don't see any bearish signature that holds when I'm looking for bearish, I don't trade it. And so we have this come here. And so during this time, price traded back into it. And the reason why I took another position, because I just entered half of my position. You know, it was a new news day, so I just entered half of my position in this place. And so when I wanted to trade, when I saw this, if you look very closely, what I'm about to indicate, we can see something like price closed outside the range of this candle. If you notice, it closed outside that low. Let me use it that way. It closed outside the low, not inside the low. If you look at the figures, you will know that it closed outside the low. Hence, it created a fair value gap, which then confirms my thesis: a sweep, a change in market structure, a sweep or an SMT, a market structure shift, and a fair value gap, right? So now we already have an SMT, because if you look up at what we viewed the other time, I don't want this video to be too long. If you look up at what we viewed the other time, we saw market trade from an higher time frame PDRA, trade through a fair value gap, turning it to an inverted fair value gap, confirmed the inverted fair value gap, which confirmed the change in state of delivery. And right here we already have like an internal structure, right? We already have like an SMT at that top. But if you want to look at it from the internal structure, we can see this is a sweep already. Do you understand? I didn't even see this sweep yesterday, but this is a sweep, right? And then this is a market structure shift that we have here, and then this is a fair value gap, a bearish fair value gap. You see this is a market structure shift, a sweep right here, a fair value gap, and look at what price did. Price traded into the fair value gap. As it traded into it, I just placed the remaining of my position. I just balanced my position. I placed the other half, and it traded very clearly. It went my direction, and so that's how I traded yesterday's candle. It was a 1 to 2. It was a very pretty decent, but I thought it was going to run a bit more. So once it got to 2R, what I did was close 80% of my profit. I secured partial 80%, and I let the remaining 20% run. And as we can, and I moved the rest to break even, and as you can see, it reversed. As soon as it was done with that, it reversed back, and that's why Tuesday closed bullish. I believe we understand. That's why Tuesday closed bullish. And now coming into Wednesday, I'm looking for bullishness, because yesterday was a bullish day, closed bullish, strongly bullish, and it closed outside the range of Monday's candle. Yes, Tuesday closed outside the range of Monday candle. But note, we are in a bearish fair value gap for the daily time frame, so I'm going to trade very, very conservatively, because we might see reversal from here. Alright, however, for today alone, I am bullish. That's just a daily bias. Weekly bias, I said I am bearish on the weekly bias. So, but for today alone, I am bullish, and let's see how it goes. Thank you so much for joining. This is the end of my trade recap. I'm still going to bring more your way, hopefully. And thank you for joining. See you next time. Don't forget to like and subscribe. Goodbye.